yes in the perfect. I get 1 yes. I'm presuming it is audible for others. For that. All right. So friends, just before we start, as we wait for others to come and join us for the session, I would like to brief couple of things about today's session. And my name is Venugopal. I'm a practicing chartered accountant. We have been doing this webinar since the inception of GST. Every month we do one webinar, and once in a while we do a longer session, and wherein we take the accountants maybe a 3-day course giving an overview of the GST Act. We do sessions, 1-day session only on filing of the returns. We do various sessions. But we make sure that we reach to our participants every month by one session. And I always tell people that you should be attending these sessions on GST once in a while, because the law getting updated. Time to time there have been updates, there are changes that are coming up. Even if you have learnt one session, one new thing, that okay, at least you are saving some penalty. Because GST is a law where it is compliance driven, and non-compliance will actually lead to a lot of penalties. So it's better you comply with the provisions of the law. Next, we as a finance professionals, we deal with Excel day in, day out. Today, the volumes have gone up. The data that we process has gone up. The expectation from the management has gone up. The kind of the management information system companies, the management ask has gone up. More than that volume, the information which is asked is real time. And wherein we spend time is quick in sharing the information. It's like if you are getting a newspaper of 2 days old, it's of actually no value. The value of the newspaper is only today's newspaper has more value today. Otherwise, you have a value. If it is 50 years old newspaper, again you have a value, right? So likewise, if you are giving a delayed information, for example, on 22nd October, if you are giving the financial statement for the half year ended 30th September, or cash flow or P&L, it is like a much long gap, right? If they have to take some corrective actions, they have to do it immediately. So our endeavor is also upgrade the tech skills of the finance professional. So today, along with me, I have three speakers for the day that way. Firstly, I welcome EA Ashika Agarwal. She would be walking us through the various topics, various positions on how do you correct the data before you file your GST return. And you also have some data which needs to be corrected and filed before you file the annual return. Annual return has a very important prominence today, because when you, I'm sure most of you have witnessed either an audit under Section 65 or an ASMT 10 notice, or it could have been search seizure, or it could be some enforcement, or Section 70, some inquiry would have come because of the customer, something would have happened. And the documents the department would rely upon is primarily your financial statement, because they expect that is the turnover that has to come in. And where it has to come, it has to be either in 1 or 3 weeks. Of course, today the knowledge has increased. We know what to report, where to report. But way back then, 5 years back, there is like, except nil returns, the between 1, 3B and books, kuch na kuch miss ho jata. It's like the error happens. And the quantum and magnitude of error depends on your ability to make error. Because I have seen some GSTR 3Bs where the purchase value has taken as IGST input tax credit, CGST, SGST was the actual tax amount. Sometimes in the GSTR1 turnover was by mistake erroneously put it as the tax value in table 3. Sometimes some client value or some other GSTN data has been updated in some other data. System was not working, exploring by mistake, there was error, nil, submit. So various mistakes. People have done mistakes to the extent of their ability, right? So even today, the mistakes would happen. Why? Though the knowledge got updated, it's not that you will be in the same position year on year. After 3 years, 4 years, you get performance allowance and you become a manager. Then the actual work is done by junior, and who is attending the sessions is the manager. Managers knows what to do. But the juniors, they only again left their knowledge. Mistakes happen. If mistakes doesn't happen, then we are not human beings. That is why we call error is human, right? If we systematically do what it is said to be done, there are only two people or two things that can be done. Either it can be done by God or it can be done by computer. If a human being is doing, mistakes will happen. Now today's session is an opportunity to get the mistakes corrected. That's the first part of our session. The second part of our session is today we are talking not much on Excel, but more on the tally oriented. The second part of the session will be dealt by Shilpa, where she will be walking us through what is the importance of the document management in the tally as an accounting software and how do we use it, how do we integrate that. Then the another piece of the tech would be dealt by Delhi Babu, where on a real-time basis, how do I get hold of my debtors, creditors, and do a follow-up and get an update. Let's say I am someone who doesn't use the tally, but how do I get that data which is there in the tally? That is what we are going to see. These are the three things. So it's 3:10. Approximately, we will wind up the session around 5:30, 5:45. Lastly, here you are here to learn. And I see some of my office colleagues also here. Some of the old participants who are regularly attending our sessions are here. Some of the topics you are aware, you are hearing again and again. Don't worry, listen it carefully. Make sure you ask questions. Don't get hesitant that there are some 30, 40 people are there. So if I ask a question, what will they feel? Am I asking a right question? Nothing. You have a doubt, you are asking a question. So it's my responsibility at the end of the session to leave you with a complete answers of all your questions. So make sure whenever you get a doubt, feel free to ask your questions, right? So on this note, we will begin the session. I hand it over to Ashika. Ashika, over to you. Ashika, you are on mute.
So in our today's session, we will be basically dealing with our past financial year 2021-22, the audit of which has been completed. Your tax audit, stat audit have been completed. Now, while doing that stat audit and tax audit, most of you might have come across some mistake which you have done while filing your GST return for the financial year 21-22. Now, the thing is that now how we can correct it. Mistake may be minor and it may be major. Even a single typing error of one increase in zero can lead in crores of demand. That also need to be kept in mind. So today's session, we will be discussing if any mistake has happened in 21-22, can it be corrected and what's the time limit for correction of the same. Our major focus will be on that and how the same can be addressed while filing GSTR1, GSTR3B and GSTR9 returns for the financial year 21-22. So basically, our today's session, we will be dividing into two parts. First is GST adjustment time limit. What's the time limit for adjustment in relation to all three: outward liability, input tax credit, and reverse charge liability. Pursuant to that, we will be dealing with GSTR9, on which we will discuss what are the steps you have to take care while doing 21-22 annual return and reconciliation statement in line with the adjustment which you are going to do in 22-23 for the financial year 21-23. So now the first question which arises in our mind is, what is the due date to do the adjustment for the financial year 21-22. As you all will be aware that the government has notified notification 18/2022 that is notified in the month of September. Now what's that notification deals with? In the finance bill, when they announced, they have given us the option whereby they have extended the time limit for adjustment till 30th November. Now by notification, they notify that clause for time extension is now applicable, now effective. The first question which comes in mind is, as this notification has become effective, which provide and which has increased the timeline for adjustment by 30th November 2022, then what is a time limit, whether this time limit is applicable for financial year 21-22? Because this notification has come in 22-23. So the question arises whether it will be applicable for 21-22. If yes, then to what time, to what limit I can do that adjustment, and in what respect I can do that amendment or rectification. Now that notification, though notify in 22-23, but will be also applicable for the financial year 21-22. That the government has also clarified by their press release. So now our time limit has got extended till 30th November 2022. Now another question is, now time limit extended to 30th November 2022 means, is it linked to return filing or what? Means I can raise my invoice till 30th November, furnish in the return of November and then file. Or earlier to it was, or is it September month? Earlier the due date for doing adjustment was due date of filing GSTR 3B of September. So as the time limit is 30th November, now the question arises whether it will be dependent upon on October, because October return we need to file by 20th November. So last time limit is 20th November or 30th November, or it's September due date. So before answering that query, we'll like to first highlight what the amendment they have brought and under which section they have brought, and then we will give you what's the last time limit and when you can do it. So first starting with outward supply, GSTR 3B adjustment, GSTR 3B. Now GSTR 3B, as it's been 5 years, we know it's a written in a summary statement where we disclose our outward tax liability, including zero rated supply, exempt supply, and we by way of 3B only we claim the input tax credit. So the first part, which is the outward, first we are dealing with that. So outward supply. So obviously we are showing our tax liability. Now while showing, it may happen in 21-22, some error may have been there. It may be either reduction, lower turnover shown. It may be also excess turnover shown. Now the change has been made in this section, which provide that any rectification or omission or incorrect particular, I am allowed to rectify till 30th November. After 30th November, I can't rectify that mistake. So I have an option. If I have shown excess, I can rectify till 30th November by filing my GSTR 3B for 21-22 rectification I can show. Though there is no separate column in 3B to show any previous year adjustment, it should need to be adjusted with the current month taxable turnover. Either it may be zero rated, it may also be exempt. So that benefit is till 30th November. Then your GSTR1. Similar way like 3B. In GSTR1 also, they have extended the deadline till 30th day of November. So if any returns in any outward supply invoice you missed out to report, now we can report in GSTR1 and show it. If any invoice wrongly reported, that also can be corrected. Unlike 3B, which is a summary, GSTR1 is transaction-wise, which gives full detail about the invoice raised. But majorly on B2B, B2C is a, again, summary consolidated amount goes, but by way of proper reporting, you will be able to nullify the impact of GSTR1 and GSTR3B difference, if any, arising with audited financial statement through this amendment. This date is also extended to 30th day of November. Credit note. Now, credit note also was linked in a similar fashion with GSTR1 and 3B. With earlier it was September due date. Now it is also 30th November. So you have a time limit to raise your credit note, report in GSTR3B, claim the benefit till 30th November. Now, this is in relation to outward supply. If you will notice, in every three, I mentioned about 30th November. Now, what's the importance of 30th November? Earlier, what was the law? Then I will take you what was the correct and how is it important. Earlier, the time limit for 1, 3B or credit note, they were basically dependent upon GSTR 3B filing. So they have provided as a September as a deadline, and they said September by the date of September due date. So you were there, 20th October was the last day to do any amendment or any changes in your GSTR1, 3B, issue credit note and report the credit note in your return. Now, all have been linked into one to 30th November. If you see earlier, there were different dates they have provided. Earlier it was GSTR was linked by the filing date of GSTR 3B. 3B due date of September, credit note by September. Now everything is linked to 30th November. Now what is this 30th November? 30th November, when they say they are not giving you a date as 30th November, we should not think that, oh, November, 30th November means due date will be 20th December. That is not the case. 30th November, now they have linked it to return filing date. So any return which is filed before 30th November, you are eligible to do the amendment and correction for that past year till 30th November. So even if October return, though filed after 20 November, but filed before 30th November, you will be eligible for that benefit, for that adjustment, amendment, even input tax credit. But all need to be filed before 30th November. So from earlier due dates, now they have done on filing date. So return which is filed before 30th November, you will be eligible to claim the outward or ITC adjustment and credit note adjustment benefit. So this was the major changes which has been brought on the rectification and amendment. Now, even if after the 30th November, if you are not able to correct any mistakes, even after 30th November have been left, then the only option is to discharge it through DRC03, because after 30th November, you are not eligible to do any correction. Even if you do, in case of tax excess paid, if you discharge with 3B, you have to prove by reconciliation that you have discharged. So it's better advisable after 30th November to do it by the DRC03. ITC, obviously, when the time is lapsed, you can't claim it. Credit note also, even if you try to adjust, portal will not allow you. So you won't be able to claim the benefit of it. So this is the deadline. This is the time we all have. As we are standing in October, we can do our 21-22 reconciliation audit just completed. You might have find out some error, which you still, even after this September filing return, you have the option to rectify it and get it done so that your 21-22 1 and 3B resemble in the same manner the way your audited financial statement is resembling. This is very important, need to be done, as GST audit has started. They have started issue scrutiny of written notices, whereby they are raising multiple questions. Why there is difference between 1, why there is a difference with 3B, why audited financial turnover is showing so high, which is not there in 1 and 3B. To get answer to all, this is a last opportunity to do the amendment, get it rectified, make your return as in accordance and in line with your audited financial statement.
Ashika, can you go back to 4th slide? Back. 3B due date. Yeah. No. So Though Ashika has covered very beautifully, I want to repeat this because this is an important change. Even at the cost of the time, I want to repeat. I want people to make notes. And whenever you attend a webinar, it's always recommended carry a bare act with you and carry a pen and paper with you. The first and foremost important change which she said is monthly returns correction. The due date is 30th November. Now, what does this mean? Again, we date back to our circular 26/26/2017, where any mistakes in 3B we can do it later. What does the mistakes in 3B mean? I have short reported my outward liability, or I have short availed my input tax credit, which I need to do. Something I have to discharge the tax, which I have either excess discharge or short discharge, right? So if these corrections have to be done, generally earlier it was specified up until the September return due date. And today we all know the matter of the fact, again, beginning with that preamble, that error is human, right? Kuch na kuch galtiyan hua hoga, some mistakes happen. When do you generally find the mistakes? During the audit. What audit? While you filing the income tax return, various things. When did we file the income tax return? We are filing the income tax return now in this month. When was our statutory audit completed? If it is a corporate, last month it got completed. Tax audit last month it got completed. So during the one of the exercises we do in the statutory audit is how much is the tax liability, how much you have paid, and how much is short paid. In fact, the next part which Ashika will walk through is to how to identify my outward and inward related. So you identified by virtue of your stat audit or IT return filing that this is the liability for this year. Now you are comparing vis-a-vis the 3B summary which you have filed till last April to March. Those corrections you can carry out now and say, yes, there was a mistake, I corrected it. What does this 30th November signify? 2 points you need to remember. Any return that is due, which needs to be filed, which has been filed on or before 30th November. Any return, and that any return could be include March month return, March 22, which ideally I should have filed on 20th April. That return I am filing now in the November permitted. A return for the month of October, which you will file on ideally on 20th November, that you are filing it in 30th November. So any 3B that you are filing up until 30th November, the correction can be done. It doesn't mean a return of November. It is written up until 30th day. So it is 30th day is the cutoff date. Earlier, it was up until September return, which is filed on 20th October. So it is not about the September return. It is now like any return which is filed on or before 30th November is that return for you to make correction in. When it comes to 3B, the correction is expected only 2 points, your tax liability and input tax credit. So the correction which they are saying is correction in tax liability or input tax credit. Next slide. Then comes GSTR1. Friends, the previous budget session, we all know there was amendment in the GST Act. The amendment which came in section 75, which talks about general provisions relating to the assessment of the tax, and one of it which says about self-assessed tax, wherein they said the self-assessed tax means anything which has been assessed by way of filing of return and that has not been furnished paid tax. What is the return? It was all this while it was only like 7512 was only referring to section 39. But now the self-assessed tax, even GSTR1 is now treated as self-assessed tax. What could be the error in GSTR1? Copy paste error. Error is any error. I have erroneously disclosed some value as my turnover, while that was not the turnover, but I have erroneously disclosed something as the tax. Now, if I have disclosed something as my tax, right, because the explanation which is used in section 75 subsection 12, the self-assessed tax means outward supplies furnished under section 37, but not considered in the return which is filed under 39. So I have disclosed turnover under GSTR1, but I did not disclose as a liability in 3B. What is that possible problem could be? I made a supply of 1 lakh and tax liability is 18,000. Copy paste error, 1 lakh became 1 crore. And that 18,000 has become 18 lakhs. And I didn't notice it. Okay, did it show up in 3B? In the auto populated, it showed up in 3B, and I said, what an idiotic system. It is showing some erroneous data. I corrected it. What did I do in 3B? I corrected it. I put the right turnover in my 3B. But my liability is an actual liability, which is a lower number. I have to correct it. There are multiple types of corrections which are possible. Start with an obvious correction. I have wrongly reported. Any value that is wrongly reported in GSTR1 table 4 will be corrected in GSTR1 table 9. So the table 9 is an opportunity to correct whatever which is wrongly reported in GST. Now, this correction which you are doing in GSTR1 table 9 has again multiple corrections. The corrections, one is by way of debit note, credit note, or correcting the debit note, credit note itself. If you would have wrongly reported the debit note, credit note, you can correct the debit note, credit note. Basically, you will put the value in 9A. If it was pertaining to reported turnover on the registered dealer. If you have reported in table 7, which is supply pertaining to unregistered dealers, if you have reported on the supply made to unregistered dealers, you will correct it in table 10. That means any error in GSTR1 can be corrected. Return cannot be corrected. Once filed, permanently lifetime, that 1 lakh will show 1 crore. But when I download a YTD basis report, I have amended it. That means I have amended that line. So whenever you are downloading a data, you should also download with the amended values. After you download with the amended values, that 1 crore will become only 1 lakh because you have amended an invoice. The error could be you forgot to report a value. You didn't even report. Today you can report it in which in the month of October 22. In the month of October 22, the GSTR1 that you are filing, you have an invoice pertaining to April 21. So we are talking about April 21 in October 22. I did not even report it. Can I report now? Yes, you can report it now. If you are reporting now, it will be like October GSTR1, you will be filing on or before. You will be filing on or before 11th of November, right? If you are filing on 11th of November, in the table 4A, you will be reporting that invoice originally. The moment it is reported, it would be reflected in the GSTR2B of the recipient, and it would be reported as eligible credit. So the recipient on 20th November or up until 30th November, he can avail the input tax credit. So that is what the this slide, which Ashika is saying, the GSTR1 correction can be done. So the proviso has said that it shall be allowed up to 30th November. So no rectification after 30th November. It has got nothing to do with any return, but the returns filed up to 30th November. Like my outward supplies, the next important correction that is there is on credit note. Now, this is one area I have been noticing. I have been strongly noticing an audit department observing. there is a sales written in the books of accounts. You have reduced your turnover in GSTR3B next month. You have paid the lower taxes. However, you did not report it in GSTR1. You know, if you read section 34(1), what does the credit note mean? Credit note means wherever the taxable value on which the tax is charged is either found excess, so taxable value as excess or tax amount or excess, all those things, right? However, there is one more important point that is mentioned in the credit note, which says that the registered person who is issuing the credit note shall declare the details of such credit note in the return for the month in which such credit note has been issued. Whenever you are issuing the credit note, in that month you should show. However, you forgot it. You can correct it, you can show it later, but not later than 30th day of November. Now, what does this signify? Written for this purpose. You know, you can question that, okay, return means the return which is prescribed, should it be section 39? But the credit notes are disclosed in GSTR1. So we should read this, the word written here, as reporting under GSTR1. Now we have this concept of unjust enrichment. If you are reducing your liability, the other person should also reduce their input tax credit. The input tax credit availed by other person should also get reduced. Most of the audits, the ADT01, the list comes, they also have one point that the submit list of credit notes that you have issued. You will furnish the credit note, but that value is not there in GSTR3B, sorry, GSTR1, which is available to the officers. So officers are going to consider that the turnover as per R1 as your turnover. They are not going to consider the credit notes which are not reported in R1, because they will say that since you did not report it, the other person did not reduce their liability, hence there is an undue benefit or an advantage. So we are not going to give you a benefit of it. This is again a common error. So in a while, Ashika will be showing you what should be the accountant doing on an outward side to compute and find out how do I actually find out this mistake. So the point right now we have said is, if you find a mistake, correct it in this month. Now October return. So why we have taken this session now is the October return which you are filing in the November is the deadline, nothing more. And please note, GSTR1, do not delay it. Though it is 30th November, you please do it by 11th, because the corresponding credit or effect should be happening to the recipient by way of 2B. You got to do it by the 11th. So now let us move on. Okay, given this, what will be the action point for an accountant on correcting outward and inward, identifying all those points? Any questions to anyone so far? All right, so very silently participating class. Let's move on.
So now, as your turnover has got freeze, your revenue from operation, which is showing what is your direct revenue and what is your other income. Now you have to basically check which income qualify as a taxable income, and you have to ensure on that taxable income you has duly paid your GST as per the rate applicable. Now, when we are seeing our audited financial statement, few transaction will not be there, like stock transfer, deemed supply, inter-unit transfer will not be there, cross charge will not be there. So you need to be able to identify if you are having any common expenses. It's upon the company to company basis, they have to decide whether they want to go on a cross charge or ISD mechanism. But if there are some common expenses which is shared between the units, and common expenses will be there may be accounting charges, there may be audit fee, And there may be security charges, office premises, which has been used, is used for both, because where the accountant are sit, there is one accountant which is doing centralized accounting. So all that expenses which are commonly there, either you apply cross charge or ISD, which is, this is the, while addressing our clients, while looking into the audit, the way the departments are getting into it, they look into it whether the cross charge has been applied or not. If you are not having ISD registration and having multiple GST. Stock transfer, they also check whether the properly your inter-unit transaction which you have shown is properly matching with one GSTN to another GSTN. Because sometimes it's happened in books entry which have been referred for stock transfer, detail given does not correspond with the return file, either in annual return or GSTR1. So you need to be very much careful over there. Now, certain are the hidden, like employee recovery over here we are mentioning. But employee recovery is not straight away taxable and liable to tax. We have to see what's our term of contract entered with. If it's fall under Schedule 1 item, employee-employer relationship, then no tax can be demanded. Even in the circular, latest circular 178, they have said that no tax can be levied on the employee. But we have to also see there may be anything apart from that. Even notice pay recovery, they have clarified that no GST should be applicable on the same, because there is no supply of service from employee to employer. But you have to look into it that your terms of contract, your salary contract provide for that in order to determine whether the tax is payable or not. Another area where people lapse is classification. You should properly check whether anyone had. Actually, it is a proper classification. We need to check. Goods sometimes have fit into one or more two HSN code. So we have to see which HSN code is preferable, and you should be able to substantiate that. Like in a tour operator service, if I say tour operator service, there may be a package tour. There may be only one of the service you might be providing, like only accommodation or arranging for transport. Because if it is a package tour, where you are providing everything, accommodation plus transportation, then you have a reduced rate of 5%. However, when the service are provided one by one, then it does not fall under package 2. GST at the rate of 18% can be levied. Then there may be change of rate of taxes, means recently multiple notification they have issued to inline the inverted duty structure, basically to curb the refund which are arising due to inverted duty structure. They have increased the rate. We also need to check, though increase in rate, we apply the rate increase, but from which time, from when it is applicable, need to be checked. It's not that from the date it is implemented, next day you start raising the invoice with that GST rate. It may also be applicable for the goods which is supplied before that, depending upon 3 events which we need to check for the tax of the rate is: when is the invoice raised, when is the payment received, when the goods and service provided, means when the goods is delivered or service provision is completed, then only you have to say which rate of tax will be applicable. Valuation part, where we find most of the valuation, they don't do properly in case of inter-unit. Further, in case of sale of vehicle, like if there is asset sale, multiple times it has happened that the clients have not discharged their GST on the same. That need to be taken care. If there is any sale of asset, even as a scrap, you need to pay GST on it. Though they have prescribed for vehicle, there is a separate valuation they have prescribed. Other than vehicle, whatever price you are selling, at that price you have to pay GST. For vehicle, they have given, if it is a depreciable vehicle, you have to pay on depreciated value, means sales price minus the depreciation as per income tax, not Companies Act, as per income tax. Then what the value come, on that you have to discharge your GST. So these are the few checklists which we notice while doing our audits or while doing 99C, and when the department comes and do audits. So on that basis, these few things we have highlighted, which you need to take care while doing your amendment or rectification for GSTR 1 and 3B.
Yeah, so one point which I would like to highlight here is go back see the products that you are selling, services that you are selling. Is there any change in rate during the period? If yes, have you followed section 14 in applying the correct rate of tax and etc.? Second, what is the classification you are doing? Under GST, the classification is HSN. Anything you are doing, anything you are supplying, either it has to be goods or service. It cannot be both. Even if it is goods and services together, you eventually have to apply schedule 2 and say, yes, what I'm supplying is goods or service. It can never be both, right? That being the case, every industry has an association. Go back to your association and say that, hey, look, this is the classification I have done. Is my HSN correct? The rate tariff which is issued in 1/2017 updated time to time or 11/2017 updated time to time has the rate against the HSN. There are various advanced rulings that have been issued coming on the classification. Please look at it. Whenever you don't know, you are in doubtful, reach out to your chartered accountant, consultant, tax consultant, ask them, seek an opinion. Have that opinion be documented, placed on record. Suddenly, when the GST officer is coming and he's changing the classification, let's say I am selling I'm selling this water bottle and I have classified as water bottle, but assuming you have classified it as glass, articles of glass, classification itself is changing, right? So then whenever some change that happened in that will get into a bigger problem. So please check the HSN classification. And the second thing which I want to tell in this slide about cross charge. It may so happen that if whenever you have two entities, purchase order has been placed by entity 1. Goods have come to entity 2. Bill has come entity 2 because that's what the goods were needed. Just to give simple more example, I have an office in Vizag. I have an office here in Bangalore. Vizag office needed some computers. I have raised a purchase order to the vendor saying that please deliver it to the Vizag office. And I have raised this. What vendor has done? Vendor has raised an invoice, shipped the material, everything to the Vizag office. And Vizag office did not even see this. Purchase has happened here in the books of Bangalore, but the 2B, it is sitting there. So people have this mismatch. Situation 2, purchase has happened here, goods have received there. So I have to do one more cross billing because it is goods as schedule 1 transaction. Make sure you do reconcile this. How do I reconcile this? Prepare a simple matrix. Matrix all the states, both the sides, and what is my sale value which is reported here in my books of accounts and what is there in the 2B on the other side. And ideally both should match and both will match. But the moment when you look at, when you plot that, suddenly you see there are no numbers which are coming in that plot. It indicates that, okay, I have missed out some interbranch movement. Other way of finding how did I miss the interbranch movement? Prepare the sales value, purchase value, gross profit. Your net profit can change owing to overhead, but the percentage of the gross profit, if all the units are on the same line, the percentage of the gross profit should be more or less the same. So apply gross profit ratio in a vertical columnar, all the branches, you plot the gross profit for all the units. Suddenly you will see one unit has a higher sales and no purchase. One unit has only purchase and no sales. Then you'll realize material has moved from this unit to other unit. You may ask, how can the material move? You need an e-way bill. E-way bill could have been raised using delivery challan. So many things could have happened. But when you do this, you have found out that error was there and you have time now to correct that error. Please proceed.
Now, another error which may happen is place of supply. It's need to be mentioned as Delhi, mentioned as Hyderabad. So that also need to be checked because place of supply play an important role in case of intrastate and interstate. Because if it is an interstate and you report it as intrastate, the problem is that even though it's a revenue neutral, there is no loss to government. But when the department come for audit, they are like, you pay the tax and go for refund. Now, as you know, while applying a refund, though on the basis of their audit notice, it will be sanctioned, but it takes time to get that refund amount. So it's better if any error of such nature has been done, you can rectify in your GSTR1 and accordingly your GSTR3B payment also you should adjust. Debit notes also you need to check and credit note. If there is any increase or decrease, that tax adjustment as we discussed need to be taken care of before 30th November. Advances. Another area where people are lapsing is they are not discharging tax on advance. Though advance of goods, there is no tax liability. For advance on services, there is a taxability. It's still not removed. It's there. So if there any advance has been received, make sure it is properly reported in your GSTR1. Because in GSTR1, there is a specific table for it reporting. If it is not reported there, even though paid in 3B, then you have to give a proper justification, reconciliation to department to prove it. That is how it has been done. Even advance received goes with advance adjusted. Advance adjusted also need to be properly reflected in GSTR1 because multiple times we have seen that ASMT 10 notices has been issued only due to the reason that advance received has been reported, but advance adjusted has not been shown. Thereby, the value in GSTR1 showing more than what is there in 3B and our department asking for clarification. And clarification is not that one liner you will give. You have to fully substantiate with the party ledger and everything that this is what has happened. Further, even when you might have received the advance, rate of tax may be different. And the time when the invoice is raised, service provided, rate of tax may change. That also need to be taken care while doing your adjustment for GSTR1 and 3B before 30th November. And even this is important for 99C and to be prepared before the audit or department audit come into your place. Now, we suggest to people that we should do reconciliation in a multi-dimension. Now, this way, the way it's presented in PPT, the chances of getting error will be somehow minimized to 1% or 2% if this is followed. If you can implement, it's better. You implement not only for the purpose of adjustment in 1 and 3B, but for your future reference also, because this will also work as an internal control. You should work on what should be the rate wise, 5%, 12%, whatever may be the rate which is showing in your books and what you have filed in GSTR1 and how much tax discharge in 3B. Similar way, it should be also done for supply wise. Means when we say supply wise, we say taxable, zero rated. Zero rated does not mean 0%. It means export. Then exempted, nil rated, non-GST. That also need to be done. Even if you will see exempt reporting, on the basis of exempt reporting, your rule 42, 43 reversal is dependent upon it. So you need to properly report. Party wise, it may be it was B2B reported as B2C, though there will be no tax implication, but this transaction matter. Why? Now let us take one example. As we said about the credit note, and sir specifically mentioned that credit note need to be declared in GSTR1. Non-declaration may result into denial of the benefit. Now, why is it important? Now, suppose credit notes relate to B2B party. By mistake, you shown as B2C, means you reduce your B2C and you have furnished in GSTR1 also and 3B also you taken the benefit. Now, the problem with the department is they will not agree. They will say, how I can give you the benefit of the credit note disclosed as B2C? Why? If you remember, sir pointed out one of the important thing is that tax benefit that your counterparty should not be eligible to claim the ITC to the extent of credit note raise. As you have shown in B2C, in the counterparty of B2B, that credit note not be reflecting. As it is not reflecting, there may be a case he might have reduced, or it may also be a case he might not have taken the credit note impact and have claimed full ITC. But the question arises, who will give the justification, who will get that confirmation from the client and then furnish it? Because both the situation are possible. So it's better if any transaction reported as B2B, B2C also need to be verified, because that will also impact your tax liability. Multi-GST, as I said about the inter-units, that also need to be done very properly. Any unit, even you now make sure that this reconciliation is also done with e-way bill. Now officers are also going into e-way bill. They are downloading the data. Now they are giving it to you. Now you keep reconciling, keep furnishing them. Why this e-way bill got cancelled? Why this e-way bill has been delivered to this place? That all they are asking now. So one of the important thing now, you should start with e-way bill reconciliation also. Now, more or less we do book reconciliation. But if we do all this type of reconciliation also, it will work as such a control, such a check, that any one question, any one error, if it has happened, you will be able to see that and you will be able to verify the same before the time limit or within the time limit and get it rectified. This is basically how you should do the reconciliation. You should check what's your turnover there. Now, books turnover will obviously represent what is my actual turnover, not stock transfer. So you need to be very much careful. You should see what's your turnover, divide into if it is a multiple GST, because consolidated balance sheet is prepared. Or books, sometimes people also maintain one single tally having multi GST. So your turnover, your books, the way you have maintained, you should divide into multi GST, and including the stock transfer should check whether in respective GST proper turnover has been reported or not. This is what we discussed, that you should do multi-level reconciliation.
Just previous slides, please. Yeah. So, like, how do you arrive at the turnover? You know, we said there is a difference between books turnover and the GST turnover, right? You have to ensure books, GST, 3B, R1, IT return, all match. Bank statement, everything match. When I say match, I am not saying that it should be 100, 100, 100, 100 all the places. It will not be, it cannot be, because in your IT returns or the books, you will not show Schedule 1 transactions as a supply. Because accounts, the primary basis for an accounting, there should be a transaction value. Schedule 1 is deemed as a supply, even though there is no consideration. When I transfer goods from Bangalore office to Vizag office, for the purpose of GST, it is supply. I am moving from one pocket to another pocket of my own. So it is not a supply at all. So you create, so from the books turnover, you also find the another adjustments that will come up, like stock transfer and everything, segregate into GST and wise. After you segregate into the GST and wise, found out that, okay, there is a turnover. That turnover, you have to bifurcate how much is 5%, 12%, 18%. So you also got to compute the tax, right? So whatever the turnover that you have computed in this slide, so which Ashika was showing in the next slide, was for rate wise, you segregate the same turnover so that you can compute your total turnover. How much is IGST, CGST, SGST, and you get a value of it. To that, you add in the last column where she has shown RCM and outward supply, so that you get your total turnover that is matching. So one section, the top section, she has written outward supplies on which tax is payable. Below section, she has mentioned outward supply on which tax is not payable. Eventually, you are matching and saying this is my turnover for the year and that is my tax liability for the year, segregated into the various categories. So the first action point for the accountant is to freeze upon what is my turnover and the liability. At this point, we haven't come whether this tax has been paid or not is a secondary. We are now coming and making an estimate for the financial year 21-22. What is my turnover and liability? That is what you have to freeze. Once you freeze this, then you got to go to the reconciliation of how much tax have been paid and payable. Yes, Ashika.
Now, rectification of taxes. So if there is any additional liability, if it is before 30th November, you can pay with tax, you can pay with credit. Even after 30th November, you can pay with cash or credit. But while filing annual return, you have to pay it through cash only. There's no option to pay through credit of any excess tax which is payable. Now in ITC claim, ITC part we will discuss with the ITC. After outward, there is a ITC. In a similar fashion, the way we discuss for outward, 30th November, even for input tax credit, the date for claiming ITC is been now aligned with the filing of the return, that is 30th November. Now, if you will see over here, though it's 30th November, so earlier it was 20th October, September till September, we were claiming, doing adjustment. Now it's with the filing of return on or before 30th November. With this, there is one important thing to be noted is section 16(4) provide a time limit. Which time limit was that? After that, you can't avail the ITC. So one of the instance, if we say, now I am having my March month return. Now March month return, March 2020 return, 22 return, I might have filed in, let's say, in October 2022. Now what the department will say, that you time limit for availing the ITC prior to this was that I can claim till 20th October. Now, March 22, if it is filed after 20th October, department would say, as it is filed after 20th October, you won't be eligible. But what we say is, time limit is for availment of ITC. Though I might have filed my return after 20th October, but that returns relate to March. It's not related to September. So even though it is filed after 20th October, I will be eligible for the same because time limit is for availing the ITC by September return. So March return, even though filed after 20th October, we are eligible. Now, no more of this ground we can take because now it has been linked for date of filing. If I have filed my return, any return of 21-22 before 30th November, then only I will be eligible to claim the ITC. Otherwise, I won't be. So even belated filing, which we say after the time bar, and we used to take the ground that returns relate to March, ITC claim in the March, only return is filed delay. So we should be allowed. Now that ground you can't take anymore. As it is linked, now make sure all your returns are filed before 30th November. All your ITC, if any left to be claimed, is claimed before the filing of your GSTR 3B before 30th November. Otherwise, you won't be eligible for such ITC and that ITC will lapse. Now for ITC, what are the checkpoints? Is first you have to see what are the expenses you have in your PL. So that expenses you need to segregate into two parts, which are GST related, which are without GST. Now, which are GST related, on that too you will check whether you are eligible to claim the ITC in compliance with section 16 and 17. And without GST is basically you need to check on RCM applicability. Once you have find out which are your GST related expenses, now you have to look in whether you are eligible for ITC or not. For that, basically you have to see whether you are engaged only in taxable business or you also have something as exempt. If you are only in taxable, then you are eligible for full ITC except section 17(5) block credit ITC. And if you are engaged in exempt, to no ITC. But where there are both taxable and exempt, then ITC is eligible, but proportionately. Over there, Rule 42-43 comes into picture, which talks about common input tax credit. So you have to see, is there any transaction on which you might not have discharged the tax? Maybe one transaction only, but you might not have discharged, been exempted. Then you are required to follow Rule 42-43 and you have to do your ITC reversal. May be noted, interest. Interest is the most common, which most of us get. Interest on FD and interest of loan, whatever may be of interest nature, on which no GST is applicable, been exempted. But for Rule 42-43, means common ITC reversal, interest does not qualify and you are not required to reverse the input tax credit on account of interest. So once you have sought out your inward data on which GST is charged, then comes it matching with GSTR 2A. Now, if you will notice, I have used the word 2A as we are talking about financial year 21-22. Because 2A give us invoice based data and 2B give us on filing based data. So as we are doing for full year 21-22, it's better to refer invoice based data of GSTR 2A to do the reconciliation, because it will give us the better picture of ITC, which is there, which is not claimed, or which is only in books. Basically, we divide our ITC reconciliation with 2A in 3 parts, which is matching, which is only in portal, means appearing in 2A, not in books, and which is only in books, means in books, not in portal. After dividing that into 3 parts, if match, we'll check eligible. If eligible, we claim, it's okay. If excess claim, we have to reverse. If it is only in portal and not in books, then we need to check whether we missed out or we have maybe expense it off. If we have a time limit, it's eligible, you can claim. Now coming to only in books, a transaction which is appearing only in books, that ITC you should not claim, because Rule 36(4) was in impact. Further, from 1st Jan 2022, Section 16(2) has come into force, which says that credit will be allowed only of which is reflecting in your GSTR 2A and 2B. Thereby, from Jan 22, you have to follow. Though for April to December, you are not under obligation to follow. But from 17-18, department are irrespective of any fact, they are continuously issuing notice. So it's better you look into, if anything is only in books, you follow up with your vendor, get them file GSTR1 properly so that it reflect and you can claim the ITC, as you still have a time of 1.5 months to do all this thing. Even not 1.5, it's 20th October only. So if any data you are finding only in books, follow up your vendor and do the needful.
Yeah, so one point which I would like to highlight here is this matching of credit. You know, input tax credit should match with your books of accounts is something department is expecting today, that the position of the law is same as on 17-18. So though I tend to disagree with their view, however, there have been notices, constant notices, if you see 17-18, 18-19 GST audit, stating that if there is no credit appearing in the portal, you cannot take credit, right? So that is where Ashika has put it a bucket, that in the portal is there, books of accounts are there, presumption that you have taken in 3B, you don't need to take an action. But the credit is appearing only in the portal, only in the books, but not in the portal. That is where the problem comes, because we have section 16, subsection 2, that is a mother section, where we take the credit, wherein clause AA has been inserted. Okay. This insertion to the clause AA has come by way of the Finance Act 2021. And the effective date which has been given to it is 1st January 22. right? So the notification 39/2021 gave the effect to this, stating that you can take credit only if it is appearing in your GSTR2B. Otherwise, you cannot take the credit. The effective date, according to me, will survive from 1st January 22. So does it mean the prior things we will get the credit blanket? The answer is no. You will have to fight for it. Department will say, no, this is there, then you have to fight for it. It is not a blanket exemption. But the point here, as Ashika rightly mentioned, that you've got to go back, follow up with your vendors and make sure that they upload it. Most of the time, they would have, here it doesn't really mean that your vendors are bad. Maybe your guy who has placed the purchase order, at the time of issuing the purchase order, he did not mention your GST number, or that guy has went to the shop, purchased it and come. Today, most accounting softwares are automated. In my billing software, I raise an invoice, end of the month, it will boom, go to GST portal and file. So they have filed their GST return. It just got missed. Instead of reporting as B2B, it got reported as B2C. And it is a pain for the corporate for them to edit a B2C to B2B, because the section B2C can be amended only once. If I make any correction in the B2C of any 1 month, I cannot correct it forever. So you got to take action. It's not that your supplier is at default. Supplier has filed the return, paid the taxes, because we might have missed it in informing him that this is my GST number, right? Any error, anything could have happened, but you got to better follow up with them and make sure that it is visible. Only then you can take the credit. All the old laws have gone. Input tax credit is vested, right? Input tax credit means credit appearing in the book, not in the portal. All those theory is gone, right? And the last section where the credit which is there only in the portal, not in the books, that is where you have to see why this has come. Now you might have a contra entry, a line item which is appearing in the middle section, not in the right section, all those things. Use a software. In fact, just some time back, someone was asking what is a good software for doing the reconciliation. And on a casual note, someone was saying, whatever be the number on an Excel spreadsheet which the proper officer and SSC is agreeing, that is the good software. But jokes apart, the right thing is buy a software for reconciliation. You may say, look, I know VLOOKUP, I know pivot table, I will do it. Manually, you can do 50, 100. Beyond that, you will be wasting your time. Today, there are many software. If you ask me which software is good, any software is good. I'm not particular to one software. Any software is good, but use a software. I've been biggest advisor of use of technology. Like in our office, we use a software called GSTR, but that doesn't mean this is the only software. Today, if you have one feature in the software, 3 months later, the other software also bring that feature. So the technology is not a USP. But the point which I want to drive is use a software to do this reconciliation so that you can be on top of your credit. And if one invoice is missed by vendor, it means so much cash you have to pay and wait till the credit comes in, right? And working capital is a problem and it is going to cause an issue. So you should also have an ability on 10th of the month. How many of your suppliers have by now have filed GSTR1? How many of them are yet to file it? At least you can send an auto reminder. Hey, look that you have not filed your R1. Please do the filing so that we can avail the credits on time. This, if you have a software, it will be able to help you to do it, but better you have that on board. Please continue.
This is basically the summary while doing with GSTR 2A. If you will find out there is any credit which is left to be claimed, you can claim it. If there is availing in your GSTR 2A, but not in your purchase register, basically you have to check whether that transaction belongs to you or not, and whether it is eligible or not, then you claim it. If transaction is not availing, not there, obviously you have to follow up. Another important issue which may arise if a person is having multi GST, like sir said about one of the example that in Vizag it is showing credit is appearing, though it's belong to Bangalore. That also need to be corrected. And lastly, as the way the department is moving with 2A versus 3B, though as I said that we will not this credit until and unless we fight for it. So as of now in 22-23, that section is applicable and you are eligible to claim the ITC to the extent it is reflecting in your GSTR2B. Even the GSTR3B format, which has been changed in the September, from the September GST3B return, that also need to be taken care. If you are aware, 3B they have made in line with GSTR2B. Any ITC claim in excess of 2B need to be properly explained. Even they have specified if any previous year ITC you are claiming today in this month, then you have to show it in a 2 place. First by adding it to 4A5 and then by showing it as a 4D1, so that they are able to reconcile with GSTR2B and they can know which ITC you are belongs to this current month and which ITC belong to previous month for which you are doing the adjustment. Now, there may be a reversal of ITC as we discussed. Block ITC, you need to be taken care. Even where, as per the law, you have to make payment to your party within 180 days. There may be an instant where payment has not been made. On such account, you are required to reverse the ITC. And you will, though you will be eligible to avail the ITC on the same at the time of making payment. Now, one may question, even if I don't reverse, what would be the consequence? To the max, officer cannot demand you to reverse the ITC. Even if its payment is made 180 days, to the max, he can demand you to pay the interest for such time being. Now, Rule 42-43, as discussed, also need to be taken care of. These are the basically block credit, will deals with the personal consumption, motor vehicle, food and beverage. So this all you need to check. If any of the ITC falling under 17.5, you make sure you have reversed and disclose in GSTR3B. Disclosure in GSTR3B is very important for input tax credit. Now in books, your ITC may be 1 crore and in 3B, you might have claimed only 80 lakhs. Now how the department question is, now what happened instead of reversing the credit note in a month, suppose you have 1 crore and that is net of credit note. And in your 3B, you reported 80 lakh. That is also net of credit. Now, how the department treated that I will not assume that you have reversed the credit note as you have not separately reported it. So reporting in GSTR 3B and GSTR 1 properly is very important. Even though your books is showing more, if in 2A or 2B, your credit note is reflecting and thus you have not given separate disclosure, then the department are ready to disallow you to the extent of credit note showing in 2B and 2A. So proper disclosure need to be shown. For credit note, you have to disclose in 4B1 from now onwards. So you make sure if any credit note reversal is there or ineligible block ITC reversal is there, you show separately instead of netting off and showing it into 3B of ITC avail. This is payment within 180 days as we discussed. Now, this is basically linking with GSTR 9. Like in 9, we report what is the net ITC we are availing. That is ITC available, less the credit note, less the reversal. This is your net ITC, which we report in table 7J. Now, 22, 21, 22, part of the ITC you might avail in 22, 23. That ITC we need to report in table 13 of GSTR 9. And then less, there may be also some reversal which you have shown in 22, 23. So this, what is shown in books, suppose 1 crore, ITC avail 80 lakh, 20 lakh ITC avail in next year. So 80 lakh plus 20 lakh will give me the books ITC, that is 1 crore. That reconciliation need to be done in order to be sure that your books is in line with what is reflecting in your GSTR 3B and with electronic credit ledger appearing in the portal. all need to be reconciled, because department, when they ask for the books data, they can ask anything. They can ask you what's your books data is showing and how your 3B and electronic credit ledger is showing. So it's better while doing the accounting also, you make sure your entry should be crystal clear, which show was as a replica of what you are filing and reporting in GST portal. Reverse charge mechanism. We will just give you insight what are the reverse charge mechanism covered under. So no, section is 9.3 and 9.4. Similarly is in IGST 5.3 and 5.4. Now what's the difference between 9.3 and 9.4 is that earlier there, if you all are aware, 17-18, when the act was implemented, it was like any unregistered purchase, you are liable to pay under RC. Now this they have changed. Now only on notify purchases or notify services only we are liable. So this is a gist of basically what are the services covered under RC. Because as we discussed, 30th November is not only important for correction of GSTR1 and ITC availment. It is also important for RCM, because RCM is again linked to ITC. So if you paid the tax now, you can claim the ITC now. Now the question arises, if I paid the tax after 30th November, why I should not be eligible for ITC? Normally for RCM, it is linked with payment of tax. However, the department are linking it with also time limit. So in order to avoid dispute, it's better if you find there is any RCM liability, pay the tax, claim the credit. Basically, these are the general expenses which you will be filing. The highlighted one, which specifically highlighted, these are the expenses which may or may be there in any of your books. It may be transportation, which is very common, legal charges, basically advocate fee, sponsorship service, service by central governments, service by government service, somewhere or somehow it's there. And most of the party did not discharge the tax on it. That also need to be taken care. Director service. Director service, now they have properly clarified. You have to see 92B and 94J under Income Tax Act. If it is a 92B, great, no tax, salary, outside the purview of GST. But 94J, discharge under RCM, claim the ITC. Security service, renting of motor vehicle, and the new addition which is made in this year. From this year, you need to take care from June, is renting of immovable property. So if there is a renting of residential dwelling, I said renting of immovable, but it relates specifically to renting of residential dwelling. If any unregistered person is renting residential dwelling to a registered person, then RCM is applicable. So hope any of you who are having their rent and expense, just check whether you have procured from unregistered. If you have procured from unregistered, you are liable to pay tax under RCM, discharge it, claim it. For 22-23, though still there is a time, but why to delay? Why to pay interest and penalty? Why to wait for department to come? Because when they come, then it's been almost 2 years, 3 years, or after 5 years, and they have a time limit of 5 years to go back till 5 years. When they come, not only tax with interest, but 100% penalty also they impose.
Yeah, so people, you should actually take the screenshot of this slide, because it's very important that you take care of the expenditure. And this is where I realize most of the people make mistakes. And more importantly, the new entries that are coming. When the GST got implemented, for everyone, RCM means GTA legal service, the first 2 blocks. And if you are wondering why some are in blue color, whatever is more commonly applicable, we made it blue color. 2 main changes in the RCM in this current financial year, if I have to say. First and foremost, on GTA, there is no longer any exemption of 750 or 1500 rupees. That is gone. Even if you are incurring 5 rupees expenditure, you have to pay it under the RCM. That is point number 1. Point number 2, all the renting of immobile properties. So most of the offices, the small offices are taken premises of the person. For the person, it is a small amount. Either he wouldn't have registered, or it could have been a residential property. If it is a business expenditure for you, you have to pay it under reverse charge. That is very important. Hence, this has come up. So go through your financials every month, and if you have these expenditures, pay RCM. As Ashika rightly mentioned, two things are more important here. Point one, if you are delaying it, you are paying interest. Point two, you are realizing it after the timeline is over, which means let's say thankfully September got extended to November. Today, if you have realized that, okay, oh, I did not pay RCM in the month of April 21, at least you pay now claim credit. But if you realize this mistake next month, God save us, we can't, because I filed all the returns, I did not take the input tax credit. So it is going to become a chaos. The RCM is in the input tax credit, the easiest thing to do is reconcile books with GSTR2B and just send one notice. Easy thing. Difficult thing is to catch if you have not paid anything on reverse charge basis. That is a difficult thing to catch, and hence this slide takes a prominent role. Please continue.
These are the RCM notified for goods. So like in our ITC part, we did our expense bifurcation with or without GST. Now on without GST, you have to check whether RCM applicable or not. Certain items which you are procuring, though covered under RCM, may be reflecting in your GSTR 2B or 2A, where your person who is providing that service is registered. In that way, you will be able to identify. And certain expenses, from where you are receiving, that person may also be unregistered, that you need to be specifically checked. Now, how you will report is in GSTR9, we basically report under table 4G, for which tax on inward supply liable to under RCM. If it is received from unregistered person, ITC is availed under table 4C. And if it is received from registered person, then 6D is basically GSTR9 reporting, in which table you have to do. Now you have to do the reconciliation and check you have properly discharged. Is your ITC claim under RCM cannot be more than ITC paid under RCM, sorry, tax paid under RCM. That you need to be very much careful. You have to also check your GSTR 2A and 2B, that if any expense shown over there and you are saying I'm not liable, maybe transaction does not belong to you, or it may be by mistake your counterparty while uploading it have clicked RCM. Yes, you have to make sure he rectify it. Why I'm saying it, you make sure it is rectified, because department goes blindly on GSTR 2B and 2A. In one of our case, he blindly on basis of 2A demanded us to pay the tax on the RCM, where actually SSC is saying that this party he doesn't know, he don't know whether this who is this party and why it is reflecting. His non-compliance, his not looking into it, overlooking that data, overlooking that trace, basically ignoring it because it does not belong to it, has resulted into a tax liability. And he was thereby he was required to get the confirmation from that party to whom he don't know, to get that this transaction he has wrongly shown. So while doing your GSTR 2A and 2B, you need to be careful what are the transactions showing under RCM, whether it actually belong to you or not. Otherwise, you have been forced to get some information and data in order to stabilize it does not. Even though in your books you will show that it's this expense nowhere is there, party ledger is not there, then also you have to substantiate it by getting the party confirmation. And it's very difficult to get from the person whom do you know, who you don't know. So from here, my colleague Jagadeesh will take over.
Yes.
Jagadeesh, you are there?
Yes, sir. Thank you, sir.
Yeah.
Sir, I request for the remote controls. Yeah. Okay. Yeah. I will take you through the GSTR 9. changes. And first of all, let me give you the glimpse of GSTR9. Before going into the detail,
Okay.
let's understand the structure of the GSTR9.
Jagdish, you want to, Jagdish, you want to share your PPT?
Yeah, I will share.
Okay. Okay.
That is delay.
Maybe Ashika, you can stop sharing the screen.
Yeah. Okay, I will take you through the GSTR9 annual return. Okay, is my screen visible, sir?
Yeah.
Okay, okay, sir, fine. Okay, what section 4 is saying that as per section 44, every registered person is required to file the annual return. But certain exceptions are there. That we'll see. Okay. As per section 44, every registered person is required to file the annual return, other than input service distributor and the person who is required to pay tax under section 51 and 52. That is TDS and TCS, and casual taxable person and non-resident taxable person. Except these person, every registered person is required to file the annual return and along with the self-certified reconciliation statement. That is nothing but GSTR 9C. Though section 44 mandates every registered person, however, there are certain exceptions have been provided. Let's see what are those exceptions who are not required to file the GSTR 9. So, registered person whose aggregate turnover not exceeding 2 crore not required to file the annual return. But if his aggregate turnover exceeds 2 crore and not exceeding 5 crore, he is required to file the annual return, but 9C is optional. That is the reconciliation statement. Whereas if his aggregate turnover exceeds 5 crore, then he is required to file both annual return and in the reconciliation statement. That is 9C. Okay. So let me give you a glimpse of this annual return. Before going into detail, it is important to understand the structure of the annual return. So annual return consists of total 6 parts and 19 tables. We'll see each part wise. And in the part 1, it consists of 3 tables, table 1, 2, 3. There's the basic information we required to report it here. All the information in this part 1 will be auto-populated. This is nothing but the legal name, trade name, and the period of filing. Coming to the part 2. In part 2, here we are required to report the turnover and the liability. It comprises of the 2 tables, table 4 and table 5. Table 4. In table 4, we are required to report all the outward supplies on which tax is payable, and also the inward supplies on which tax is payable under the reversals. Whereas coming to the table 5, here we are required to report all the non-taxable supplies. And coming, I will discuss in detail in the later slide, the turnover part. And coming to the part 3, input tax credit. It comprises of total 3 tables, table 6, table 7, and table 8. In table 6, whatever the ITC availed for period of filing, that we are required to report in the table 6, and table 7. All the reversals made during the period in GSTR 3B, that we need to report in the table 7. Well, coming to the table 8 is an informative table. It provides the reconciliation with GSTR 2A. Coming to the part 4, tax paid details. All the tax, this is nothing but tax paid versus payable. Tax paid will be auto-populated from the GSTR 3B, and payable will be run from table 4. Coming to the table 5, all the adjustments, as Ashika ma'am explained, whatever we have made the review after completion of the financial year. If any discrepancies, what we have observed, all that will be made after closing the financial year. All those adjustments which have been made after closing of the financial year that is after March 2022 and before 30th November 2022, that we will adjust in this tables, that is in table 10, 11, 12, and 13. So up to 31st March 2022, whatever we report that we need to disclose in the table 9, and what are all the adjustments that we have made after 31st March 2022 and before 30th November 2022, that we need to disclose in the table 10, 11, 12, and 14. We'll see what is 10, 11, 12, 13, 14 in the later slides. And coming to the part 6, other information. Government is expecting additional information from the taxpayers. So all this information we need to provide in the table 15 to table 19. So first we'll see the turnover part. So as I discussed in the previous table, what are the turnover we are declaring in 3B up to 31st March 2022, we are required to report in the table 4. And after 31st March 2022 till the 30th November 2022, what we are paying tax pertaining to the period 21-22. All those adjustments we are required to report in the table 10 and table 11. Still, if any tax is payable, that is after 30th November 2022, that we need to pay through the DRC03. So this DRC03 payment should be made in the cash. As Ashika explained about this, why we need to pay the tax. Let's see. Let's take an example. 21-22 liability I have noticed after 30th November 2022. I have a balance in the electronic credit ledger, but by the time of 31st March 2022, I don't have any balance in the electronic credit ledger. Now I can pay the DRC03 using the credit balance as on 1st December 2022. But what happens? I am discharging the past liability, that is 21-22 liability. I am discharging by using the credit that is available on 1st December 2022. So what happening is here I am discharging the past liability with the future credit. It should not happen like that. So always the thumb rule is that past liability should not be discharged using the future credit. Okay, that's why Ashika ma'am asked to pay the DRC03 only in the cash. That's the reason. Okay. So do you want to add anything, sir?
Nothing. I just want the people to get that the turnover that we report gets reported into various tables. And it's very important that you got to have a fair idea where it has to get reported. We are going to have a detailed session next month, but however, we wanted to give you a glimpse so that you are ready by then.
Yeah,
you can continue.
So what are the liability that we are discharging through DRC03 here? That the turnover we are required to report in the table 4. So if you report that difference turnover in table 4, then we will get a difference in the table 9, paid versus payable. And that we can substantiate with this payment through DRC03. Okay. So up to 31st March 2022, we the turnover we required to report in table 4, and after 31st March 2022, we required to report in the table 10 and 11. And again, this DRC03, what we have made payment, the turnover we required to report in this table 4 one. Okay. Now let's come to the ITC part. Okay. Whatever it comprises of 3 tables: table 6, table 7, and table 8. Table 6, whatever the ITC we have availed in GSTR 3B for the filing period, that we require to report it here in the table 6. In GSTR 3B, we are not giving any bifurcation between input services and capital goods. But whereas in the GSTR9 annual return, we need to bifurcate the availed credit in 3B between input services and capital goods. There are certain exceptions are there that we'll discuss in the next slides. This is the gross ITC availed, that is table 6. Coming to the table 7, this is the reversals that we have made in the 3B. Okay. Table 6 is the gross ITC, and table 7 is my reversals. Table 6 minus 7 is my net ITC. Okay, for that period. Coming to the table 8, it is the informative table. This table provides the reconciliation with the GSTR 2A. So these are the new changes that have been made in annual return for the period 21-22. As I already discussed, table 4. Table 4 is meant for, in table 4, we are required to report all the outward taxable supplies on which tax is payable and inward supplies on which tax is payable under reversal. So earlier, there is an option to declare the outward supplies net of credit and debit notes from table 4B to 4E. But now we need to declare the credit notes and debit notes and amendments separately, that is from the 4I to 4L. Earlier, they are allowed to net it off and declare the net figure, net amount. That's the final amount. But now, from the 21-22 onwards, we need to declare the debit note, credit notes, and amendments separately. That is from 4I to 4L. Coming to the table 5. Table 5 is meant, in this table, we are required to report all the non-taxable supplies. Okay. Earlier, earlier there is an option that exempt supply, nil rated, and non-GST supply, we can combine it and show it in the exempted row only. But now what it is saying is, as per notification number 14/2022, you have to declare the non-GST supplies separately. Still, you have an option to declare exempt and null and nil rated in the exempted row only. So what it is you can combine both exempted and nil rated and declare it in the exempted. But coming to the non-GST, we have to report it separately. So coming to the table next part, option to fill. Unlike the table 4, you can report the net figures in table 5, 5A to 5F. Whereas in table 4, that is with respect to the taxable supplies, we have to declare credit note and debit note separately. But whereas in table 5, you can declare the net amount. Coming to the ITC part, that is table 6. In the previous slide, I discussed that till 2021, even in 21-22, this option allowed. We need to report the input tax credit. So, yeah, we need to report the input tax credit in GSTR9 on input services and capital goods. But whereas it is mandatory to report ITC availed on capital goods separately, whereas you can club input and input services and declare it in the inputs row. Similarly, 6C and 6D. Ashika ma'am already discussed about this. 6C is about the RCM inward supplies from the unregistered party, and 6D is from the registered party. Either you can report 6C and 6D separately if you can bifurcate, or otherwise you can club both 6C and 6D and report it in the 6D under registered party. Okay, that's the change. 7A to 7H, that is the ITC reversal. Except credit relating to the Tran 1 and Tran 2 reversal, all the reversal you can declare it in the table 7H only. Coming to the table 8, this is the informative table, that is the reconciliation with the GSTR 2A. Earlier, there is we are required to upload the PDF certified copy by the chartered accountant, but the requirement is not there now. So we no need to upload the certified GSTR 2A reconciliation for the period 21-22. This relaxation had given in the from 2019-20 onwards. That same continue even now. For this period also, the same relaxation continued. Coming to the table 10 and 11, that is outward related adjustment that have been made in the subsequent year. These table 10 and table 11 is mandatorily we need to report it here. What are the adjustments that have been made after closing of the financial year that we need to mandatorily report in table 10 and 11. Whereas coming to the table 12 and 13, this relaxation is still continue. We no need to, it's a optional tables 12 and 13. If you can report, you can, otherwise it's just an option. Coming to the table 15 to table 18, other additional information. Table 15 is about the refund. All these tables are optional except table 17, that is HSN outward details of outward supplies. We'll go by each table. What is the table about? Table 15 is about the refund. How much refund we have applied in this table. We need to report how much refund we have applied for that period and how much sanction, how much on hold. All those details we required to give it in the table 15. And similarly, the demand. What are the demand notices we have received and what is the pending and what is the status? That all the details we required to report in the table 15E to 15G. Coming to the table 16A. Table 16 is all about the deemed supplies, and deemed supply details are required to report in table 16. Coming to the table 17. This is the important, this is the latest change. This change is proposed latestly through notification number 14/2022. So taxpayer whose turnover exceeding 5 crore are mandatorily required to report the 6-digit HSN, whereas turnover whose turnover is less than 5 crores, they are having an option to report HSN up to 4 digit. Table 18. It is also HSN details of inward supplies. It is also an optional table. If you can report, or else it's an optional table. So that's it. We'll discuss GSTR9 in detail in the next session. Just I have given the overview, what is the GSTR9 and what are the things we need to report and wait to report. All that I discussed now, but I know it will not give a clarity now because of the time constraint. We'll take the we'll put the separate session for exclusive for GSTR9 and 19 in the next session.
Got that. Thank you. So participants, any questions? So you can unmute yourself and you can ask the question if you have any. So anyone have any questions to ask? And some of you have asked about the presentation. So after the end of the session, you will get a link of the feedback form. So once you fill the feedback form, you will get a link to download both the presentation and the Excel automated tool, which you are going to show in a while. You will get an access to both of that. All right. So can you clarify a bit more on the bank credit in 2B? Guru, it's very simple. If you have a credit in GSTR 2B, basically the bank, when they charge 100 rupees plus 18, you might have recorded 118 as a bank charge. The 18 rupees also you treated as an expenditure, but it's appearing in your credit in 2B. You can record it as input tax credit and you can avail it. Any other questions? Check with Silpa. Silpa has a question. She has not joined yet. Huh? She has not joined. I think that was. All right. Let's move to the next part of the session. I think we have all the questions have been taken care of, and I should thank Ashika and Jagadeesh for taking up such a wonderful session. Now we have, thank you, Ashika. Now we have two other speakers. One is Shilpa and another Babu. I think Shilpa is yet to join, so we can start with the session of Babu. And I'm sure every one of you know Babu. So he's been our regular tech enrichment. So we call him as Excel Guru. And today we have two sessions relating to Tally. The session one, we will have and how do you gain control on your debtors and creditors? That is what Babu will be showing now. Wherein on a real-time basis, like you might be on the collection, you don't do data entry. You are a manager, you are a CFO, you don't need to use the Tally. Tally data might be there somewhere in the LAN network. So, but how do I get that information updated on my spreadsheet? And then I can take an informed decision of the debtors, creditors, basically the aging. That is what is more important to do the cash flow. And you might have a credit terms that are agreed within 30 days, 60 days, 90 days that you will have to pay to the parties. So rather than going to each of the customer ledger, each of the vendor ledger and trying to understand, or every time going to the Tally, exporting the data into Excel, putting a pivot table and doing all that circus. Can this happen on a click of a button? In just like a fraction of seconds, I will get the real-time live data like this. That is what we are going to discuss. Again, as usual, if you have any doubts, feel free. We will share you the Excel of the working so that you can do it yourself. We will share you the recording of today's session so that you can practice it. So in the interest of the time, we are not doing parallelly like a workshop. Make notes wherever is needed. And I'm here to guide what we need to, what we are doing. And from the day one, the session I've been telling, if you say, I know VLOOKUP, I know SUMIF, I know pivot table, that's the olden days. Even if you say, I know macros, I know how to write macros, I'll say that is olden days. What is the latest? You should be perfect with M language. That's the new thing of Microsoft Excel. And how do we use M language? We call this as Power Query because they have more power and they process large data in much faster time. Yeah.
Correct.
Over to you, Babu.
Thank you, sir. Can you allow me to share my screen, sir?
One moment, Babu. Yes, now you can do it.
Yes. Yes. Quickly, I'll give you an overview. Our agenda is to get outstanding. That means debtors and creditors outstanding completely into our Excel in real time.
And
but before that one, we are going to learn few advanced methods. I can say formulas also, but it is a methods. If you learn these few steps and few methods, using that one, you can do your data works on more and more lines of data. It is very powerful functions and features. I'll give you a clue also how to consolidate multiple sheets, how to consolidate multiple worksheets, and how to look up. For example, you know, VLOOKUP, HLOOKUP, index and match if you are good in Excel. But getting data from other sources and applying VLOOKUPs with different methods. These are all will come here. It's very interesting and simple methods. If you concentrate, if you learn these methods, easily you can automate your day-to-day works. You no need to open multiple workbooks and multiple applications. It will do everything and it will give you the output whatever you are expecting. This is what I want to say initially. Now let's go to our task, how to fetch our data. The first one, already I created a small course. I'll share you end of the session that course also and that Excel workings also. This is M language code. I'll explain you the basic how it will works. See, I have already created one demo data and also I created a small code also because we have a less time. I can't explain each and every line and I can't give any training on coding. Just maybe if you observe that code, you can easily learn. The first and most, we need to have tally data, and also you should open with application the tally data. Maybe you know tally application is different, data is different. The second one, you need to check your application is activated with ODBC server. Okay, the port number also 9000, or you can change. Maybe you can easily understand if you have 9005, then there is a code. If you see code also, you can able to understand the port local host. You can change 9005. The by default tally will give you 9000 only. Okay, again I'll show you, this is only one configuration you need to check before doing this exercise. F12 configuration from gateway of tally and advanced configuration. Just check once again the port is 9000 or not, or ODB is enabled or not. That's it. Okay, our next process, I created an Excel file. Maybe it is available from this feature. 1 minute.
Basically from 2016 onwards, Office 365 version, like anything. We are in
Yes,
20.
yes. If you are older version also, you can download. There are add-ons. Windows only is offering that add-ons. You can download and you can install the add-ons. You will get these features. See, from data tab, there is there are small slide methods will change. That gateway will change. If your Office 365 or 2016 and above, you will get data and get external data. Get transform data will come. That group under that you will get data. From that you will get this complete list. Just don't worry. You just check in this group data and get external data. Somewhere you will find this feature. From this one, blank query.
So for the new users, you might have directly this called Launch Power Query Editor.
Yes.
You can click on Launch Power Query Editor. You will land up in the same screen which you are seeing.
Yes. See, if you come to this screen, automatically you can able to see the home screen and advanced editor. Here you can write your M language. Just click on it. It is giving by default one sample, but I have already written that code. This is for bills, receivables. Just follow my methods. Also, you will get this video, and also you will get this code also. You can go through this code. You can understand easily. Just press button, done. It will go and fetch data from tally. Okay, you just give a name for this query. You say receivables. Sorry. Receivables. This is one table. In data language, we call as table. The second one, again you click advanced, sorry. You click right click, new query, other sources, blank query. There are many ways to get this blank query. From home tab, there is a new query group. From here also you can able to get that option, or you can right click here, you can insert your new query. Okay, after inserting this query, we'll rename it. It's a payable. Just click on advanced editor, it will give you empty. Just this code you copy and paste it. See, here also is very simple method. They're asking let an in. That means we need to give some input. Then automatically that will recognize and give you output, and the backend everything it will take off. The port is URL. If you see here, this is your port local host. It will call to that port. Just click OK. Then you are able to see.
So we got receivables and payables.
Payables.
It's like this, just automatic.
Yeah, this is very simple step. You can easily get this data. From here, we need to apply our mind to manipulate this data to get expected our format. The third one, for this party name, I want to see if you see here, you can able to imagine. If you see in tally, in payables also you can able to see debit and credit. In receivables also debit credit. But from query, it will give you payables means all debit values, receivables means all credit values. To identify debit and credit this party name, we need to get again ledger table. Same thing, we need to insert and create one more table. These are all one-time activity only. Ledger table, advanced editor. Just I'm updating this code. In this my code is a SQL query. Okay, one more thing. Here it is replacing SQL also. Okay, there are many things. Okay, we'll see one by one. So it's quickly it is fetching. Maybe in your Excel also it won't work like this if you have large data, but Power Query will work very faster.
And this data, this query, you can actually run in the Tally control, and you can just write select dollar name, dollar primary
Yes.
group. You will get this. So this is the new language of a finance world is API world. So
Correct.
how interconnect the data, get the data. Please continue.
The second one, you cannot get this much faster in your Tally also. If you want to export your data, or if you want to export the same ledger table from Tally also, it will take time to update row by row in Excel. But the Power Query will read and update very quicker way. Okay, now we receive receivables, payables, and ledger table. Next, our task is we need to merge these two tables. That means payables and receivables. To merge, it's a append. See, from home there is a combined group. Here we have merge and append. I'll tell you what is the difference between merge and append. Append means it will take all the tables and it will add one by below that one. But merge, it will merge the data. See, the primary table is receivable, secondary table is okay. Before that one, to identify this data once we append, is it receivables or payables, just we'll add one column for our reference. Otherwise, we may confuse. There are many methods. Yes, blank. Just I'm copying to reduce my time to account it. So it's given one column for reference only, it's bill type. We'll update same thing in payables also. From add column, just insert custom column. We'll give bill type for column. Here if it is not empty, we'll give payables. See, now we received, we can able to see is it payable and receivables. Once we append also from home, there is a group combined. From that append and new, we can append. Then these two tables will append. Instead of combining that one, we'll do separate. Then we will have a reference. Payables. Okay, receivables.
So what we have done is we have merged two tables in third table.
Yes.
Why did we do? I'll just tell you for a moment. If I have received an advance from a customer, ideally customers are bills receivable. But if I receive an advance from customer, the Tally will record this under bills payable table because I have received a money which I have to pay it back to the customer. Likewise, if I have paid an advance to my sundry creditor, in the Tally, it will be showing as a bills receivable, though it might not fit your logic. The logic is bills receivable is debtor, bills payable is creditor. Since the data is merged, we now have to identify who is my debtor and creditor. That is the reason we are now taking two tables and appending it, right?
Yes.
Why did we get the ledger table? Sometimes you might have posted some transactions without giving the bill reference. So there could be a position where there is a money receivable or payable to a party, but you have not created the bill. So we have to also create that exception to follow. Please continue.
Yeah, now we appended these two tables, receivables and payables. We can able to identify based on this, is it payable and receivables. It will give each reference number wise, bill wise the data is there. Now we need to add or need to identify this, we don't know. Maybe it is available in under group, debtors or creditors. We need to add here column for parent group. For this one, it is very simple, like how I did as append. Same similar way, merge from home tab, combine group. The merge queries as new command. Just click on it. It will ask you the primary table and secondary table. The secondary table is my ledger table. From ledger table, which column is matching? Party name and from ledger table's name. These two will match. That's why I added these two. Here it is very interesting. If you know basic SQL, this will come from SQL only. It is like SQL. Maybe if you know SQL, you can write left, right, the join functions. Similar way, everything it is taking backend. Just you need to know what to apply, how to apply. Just full out all rows from both. It's created final data with ledger master. I'll show you. We'll give this free name. See, it is created and added with the ledger table. Just click on it. What are all fields you want to add here? You can add all things. We'll see. Maybe it will give you for
You don't need the name. Maybe you can remove. Yeah, for them right now we can show. Later it can be removed. Yeah.
Yes, yes. If you don't want, you can remove it. Just right click and remove also. It is okay.
So now you know that okay, this is under creditors, debtors.
Yeah.
Yeah.
Now we have party name, bill reference number, due date, and also in tally group.
Babu, just hold on. So members, you can see the first two lines itself. You know, the first one, bill table is payable. It is under sundry creditor. Very right. The second one, we are getting the value from the receivables, but it is still creditor. That means I would have paid an advance to that party. So the bill type could have been anyone. That is where we wanted to know who is a debtor or a creditor. That is why we have appended this new table.
Yes. Now we have everything in our table. Now we can, okay, before that one, just select all the fields and convert it to respective table type. That means if it is a date, it will change it to date. By default, everything will come as a text and number. But there is an option, transform option. From here, you can select all the columns and click on detect data type. It will recognize the complete column and data, then that will convert to, if it is a date column, it will change it to date. If it is a number, it will change it to date. If it is number and character, then it will convert to number and character format. It is easy for you to your calculations. Suppose if you are without detecting this one or without changing to number, if you try to multiply some values, it won't give value, it will give reference value. Reference errors. Okay, up to here, any doubts? This is very simple. Already we have receivables table, separate table, payables, ledger table, and our consolidated table. This is final table with our ledger masters and ledger closing balance. We will explain you why ledger closing balance is required.
Babu,
Okay.
you may say simple. For people who are seeing first time is like, okay, can you repeat it once again? Don't worry, members. We have a recording of it. We will share you the recording.
Yeah. See, this is one-time activity. If you do, these are all formatting and activities, then your job is to refresh. Only whenever you created data in Tally, just only refresh.
By the way, you don't need to load all the tables. You could
Yes,
delete and you can just load only your final outstanding table.
yes, yes. Yeah, I'm deleting that's why only. Otherwise, it will create high volume and the file size also will increase.
So where the moment you delete, I'm not sure how many of you are noticing, and the right side has become only connection only.
Connection, yes. Just refresh it, it will refresh. just click here, just right click. 1 minute. Oh, sorry.
Select the table and you click on load.
Yeah, load to, right click and load to. Just create a table, or you can create connection only. Everything is okay. Okay, I'm going with the table. Sorry.
Yeah, put it as a table and load to A1.
Yes. Now it is loading all the tables. You can able to see here 2859 rows are added here. Using this one, you can do whatever you want. You can do pivot, whatever analysis. Now you have your party and payment amount.
Primary group in the filter. Put it in the filter, primary group.
Yes.
And you can just select debtors or creditors.
Debtors, right, sir?
Yeah.
Okay.
And now you put the dates into in the column overdue days.
Yeah. Just something short and
and you can just group by apply the group by and yeah, by the way, this group by it will automatically do, and you can give every 90 days or every 100 days. You can just give.
okay.
So now
This,
you automatically got the aging.
yes.
So basically you got the receivable aging, and you are always wanting to know whatever the receivables which are current and which are long.
Yes.
Just quickly, we will see how we can how correct this is. Let us pick that first one. Let's go to tally and see this some contractor which is there in Gadag. Let's see 44 lakhs. Is that number right? Yeah, 44 lakhs 58,000, and go to bill wise. Yeah, bill wise.
Yes.
So these are the various bills that are there. 44 lakh 58,000 is the money that is due from this contractor. Now, let us say, come back, go back to tally. Escape. Alt A. F6. F6, not sales, receipt.
Okay.
Let us receive some 10 lakhs from this person. So 4458 is now becoming 3458 against reference. And just keep adjusting some numbers.
There are many, sir.
Okay, no problem. Debit to your.
Yeah. It's July 1st. Okay.
Yeah.
Yes.
So now it is 3458. So you are not the accountant. You are a manager. You are doing collection follow-up. You want to have dashboard. Let's go to that Excel now. All that you will do is just refresh.
Yes.
And hit the refresh button, or go to the data.
Refresh from here. It will refresh everything. If you refresh it will only refresh pivot table. If you have connections, then you apply from here.
What something? This data is not refreshed. Can you just?
Yeah, it's refreshed, sir. The 34, 58, 12.
Now that Gadag moved from level 1 to level 2 instead of 44 lakhs. Now it is only 34 lakhs.
Correct.
This is the power of the data query management. Now management has given you a task of sending your aging analysis once in a week. Now someone will take at least, someone who is pro in Excel will take 1 hour to prepare data aging, creditors aging bill wise Now, Babu, go to the pivot.
Yeah, definitely, sir. If they do manually, it will take. If they expert also at least minimum 1 hour. If it is not expert, it will take 1 day.
Yeah, Babu,
To get this.
click on analyze on the top. No, go back. Click on analyze. Bring that bill name, field it. Yeah, go scroll up. Reference number below the party name. Yeah, so right click and minimize all.
Yes.
Yeah, so now you want information, that respective information is there. Now the accountant doesn't need to do anything. Just hit this refresh button. He has all the data with him. Yeah.
Yes.
This is the advantage of Power Query. And you want to change debtors, you want creditors, you have creditors. You only have what you want.
Yes.
So you can see your creditor. And by the way, on the top, we all know pivot table has that advantage of grouping. It does the grouping automatically. Earlier it was only 500. Today now you can see 800 to 899. So every 100 days it is automatically creating the group by itself. And once data comes to Excel and pivot tables, you are masters in it. And if you are not, you master it, because now that is the basic expectation. If you don't know, Babu, just insert slicer in the analyze. Yeah, so insert the slicers and you just use party name. Yeah. So close the party name, click on bills payable. Now you can see automatically the numbers are becoming only positive, which means these are the payable creditors where you have liability to pay. Click on receivable. These are the creditors you have paid advance to the customers or your parties. You know, everything you're getting on a click of a button. This is what is the need of the hour, need of the day, and where the information can be shared. In fact, I'm not sure how many attended the last session or last. We have shown you the information which is there on the Excel sheet. On the right side, I press a button, whatever you are seeing just goes as an email, even that we have shown. So you will be able to do it. And so it's like you selected some parties, you only want to know, you want to group by. Once the data comes, what cannot be done in Excel is what you cannot imagine. If you can imagine that this is how I want the data to be, that's possible. What is not possible is what you cannot imagine. That is how I would tell the people. Any questions to anyone?
Yes.
And Babu, isn't it like a wonderful feature? Every accountant should be knowing about this. Yeah. Good. Anything else, Babu?
Yeah, this is that's it, sir.
Great.
Any doubts up to this stage in process? Wherever you have doubts, just ping me in through chat. There is another session also. During that, we will clarify. Then we will share you this link also. You can follow the video link. You can able to get the steps. Thank you, sir.
Thank you very much, Babu. And we will move to the next session, Shilpa. Shilpa, can you? Yeah, I can see you logged in. Babu, you can stop sharing the screen. Shilpa, can you share your screen?
Hello.
Yes, Shilpa. Yes, you are audible. Yes, you can share the screen now. Shilpa, can you share your screen, please?
Sir, sharing.
So members, again, now this session we will look at the importance of the document management in Tally. I'm sure most of us are using Tally. And in Tally, one of the most important requirements is when the data is sent for the audit, people will be it's like trying to find a voucher where it is or various information. For example, I have a customer. I want to see the GSTN certificate of that customer. Or some of your customers may say that, okay, send me your bank statement, the bank attachment or cancel check for processing the payment. You want that information and you don't want to search all over the place. How can I get that information like this? That is what we are going to show. Yes, Shilpa. So basically, this is a small add-on. We call this as TDLs, where we can add on to the Tally. That is why we call them as add-ons.
First, you need to install the TDL file. All of you know how to configure this TDL. Press F12.
So once you do an order and on the left side down, you find Alt Control T. Can you press that?
1 minute.
Shilpa, can you just press Alt Control T? On the left corner, everyone finds that there are TDLs 1 of 3 loaded. That is where you generally load your TDLs.
After that, go to the F11 feature. 1 minute. Okay. Go to the F11 feature. There, add-on feature. Here, you need to enable the document attachment module as a S. And here, you need to define the path of the ledger master. Means here, if you add the location of a ledger master details, means which are the documents saved in this particular drive.
By the way,
So-
basically, it is not mandatory that you should have this. Most of the time, you know that the scanned documents you are storing in a folder. Every time, instead of browsing through everything, do you want to load something quick? That is where you can just put it. Okay, I just give some XYZ as my path.
So then just go to the account info, ledger, alter. Any one of ledger you can open, and here you will get the one more option as a want to attach a document. Enable that option as a yes. And
So this is just go back, please. Go back. Now it can be your customer, it can be your debtor, creditor, it could be your rental agreement, it could be your electricity deposit ledger, it could be your bank account where the bank passbook you want to attach. It could be, we are at a master level, we are not at a transaction level. So a master related documents should be at that respective master level thing. So you want to attach, then you can make an attachment to document. The moment you press yes, please press yes and enter. There are multiple options that come. You can save it onto the cloud. You can save it locally also, whatever, enter. And you can give an information. What is this? You can say, this is my account opening form. This is my canceled checkbook. This is my authorization letter. You give description. Tomorrow you might also want, you don't want to open each document and waste your time. You can just quickly type whatever is the information. You can attach an Excel file, you can attach a PDF file, you can attach a zip file, you can do various attachments. Please continue.
here in the company level, you have given already the drive name, right? If you given drive name already means you will get the list of what are the documents saved in this particular drive. So see here, in this drive, you have saved these many documents. So because of that reason, we have saved in the company level. If you don't want this one, means you can give one more path also. Here select local and give the which document you want to, like GST certificate or any bank statement. You can give anything here, like bank statement, PDF, whatever it may be. So here you need to go to the folder and give the respective folder name where you have saved that particular document. So here one Excel format is there. So you give the file name, you will get the list of that respective directory path folders.
So I'm changing the path, and the moment I give the path, it is automatically showing the list of files that are available. It's not that we have to find a way in doing it. I just go select a file that is available so that it will ease you.
If you want to in any day means any document, like what it is, for example, here this is the link is there already we have saved. So if you want to open tally and bills, so you just click on open document, so you will get the that particular link.
The link gets opened automatically. Maybe in our voucher, you can save all the data today. You have OneDrive, Google Drive as a storage. You can save the data into Google Drive, get the URL of the Google Drive, and you can enter that here. You can show that later. Maybe in a voucher, you can show that. Yeah.
So as it is same, if you want to Excel, you can just control it. So quickly you will get the information, and you can, if you are in call or if you want any information, you can open and you can.
But we are not able to see other than tally screen. I think because you would have shared only one tally window. You have not shared the whole of the screen. Maybe in your share screen button, you select whole screen. We are only seeing the tally screen. Now we are able to, yeah. So at the back end, yes, we can see at the back end. Now the Excel file got opened. Yeah, it's visible now.
This is for all masters, cost center, item, group, every master it will come this option, and wherever you want, you can paste the Google Drive link or any link or any local file. Sir, can you access?
Yeah. No, you can continue. You can continue and go to the voucher. Show them in the voucher also how do we do it.
I am able to do escape, sir.
One moment.
One minute.
So now we can, if you look at let's look at the transactions. So there is a sale. Even in a sales transaction, I can attach a document. I'll say yes. And I have uploaded an Excel file. So the Excel file could be, I will say, my purchase order from the vendor. I'll upload. After that, before billing, I might want to give the timesheet. I have uploaded my timesheet. And so it's like this data is stored. Basically, this is just a link which is stored. I hit this open button. and you can see the entire data that which we are storing is available. In fact, I can also show, let's say, yeah, let's say this is one file. I'm just copying the link, and let's copy this link, and let's come to the tally. Let's enter this in the next transaction. Attach the documents. I'll say yes, and I will say my PO approved sheet. In case you have purchased, you can give the GRN. I've just copied some various information, right? So you can, all that you will do is you can just go to this document. I am hitting this open button, right? So this is the URL. I've just said, okay, open, let's see what is the document. Now you can actually see the document is being opened. It's like no one needs to know anything. So that is what I said. This is the cloud. So the document which is there elsewhere, it will automatically come and visible on the screen. So imagine you are doing the audit of the company and you have the TDL which is loaded by you and the client. This data is native stored into the tally. As one of the participants asked, will the file get saved? No, only the links and the content will get saved. I will be accessing. So basically, how am I accessing? When you say DLR is the thing, basically the way you go to the Windows folder and you are accessing XYZ. So that is how it is being accessed. So only that path and information is being available and made information stored there so that it can be used, reused, and data being passed on for the ages. Will it increase the size of the tally? Absolutely no. What we are putting is some 2-3 lines at text. It is like a narration. It's an additional narration that you are giving. So it is not going to increase any of the load of yours. So this way, you can have a better control on all your transactions. Shilpa, anything else we need to show on the document?
Yes. Daybook wise, we can get the in the daybook only.
You might want to have extract the list of it. Yes, please show.
Yes, sir. Whatever, for example, I want to check in this particular transaction, what are the documents attached. So just whatever you want, you can just check the select line. Then just click on this one. So here in this transaction, I have saved 2 documents.
So you don't need to open the entire
entry.
You are just seeing it at the transaction level. And from here itself, you can click on the open button and see the transaction. Yeah.
So just down arrow mark and here. So here in this transaction, we have attached 2 documents. N number of documents you can attach. So as it is, you can select multiple line item also. So you can get the here. So voucher number wise, you will get the document list. And you can view here itself. No need to go inside the voucher.
Great. I think this is a very important feature. Everyone should be having it on their system so that you simplify your life. You don't run around various documents. Any questions to the participants? Shilpa, is there anything else that you would want to cover?
No, sir.
Perfect. Thank you very much. And I think it's like we have covered sufficiently on how do we automate as an accountant, how do I simplify my life, We have seen the effective debtors and creditors, the collection and the payable age-wise thing. On a click of a button, how these numbers can be changed. We have seen that. We have also seen how effectively I can do a document and record keeping management of the books of accounts through Tally. These are the two things that we intend to cover. And as I strongly every time we say that there's no requirement of learning too many things in one go. Step by step, learn something and increase your tech and automation skills step by step. So I should thank Babu and Shilpa for taking this initiative in educating all of us and enriching our knowledge as to how well we can scale our tech skills as a finance professional. Thank you, Babu, and thank you, Shilpa.
Thank
So,
you, sir.
thank you for your time. Any questions? I'm here for some time, so it can be on the GST of the first session or on the tech of the second session. Either of it, we are here to answer your queries. Over to you guys. Yeah, so Ramraju has asked what is the price for this document add-on. The price is 7,500 rupees. Any other questions? For the first one, it is free. It's an Excel tool that we will be sharing you the Excel tool. After the session, you will get a feedback link. Please fill the feedback. Once you fill that, you will get this Excel freely. You can click that button and download the Excel. That is free, Dhananjay. All right. So on this note, we come to the end of the session. Again, see you next month. And the next month session would be focusing on annual return. And we'll let you know the date and time. Ideally, we would want to do it on 19th. However, the 20th being the due date, we might have our session on 26th of November. We will be intimating you soon. Signing off and have a safe Deepavali, and to you and your family members, happy Diwali. Thank you all.